first time I'm going live after a long, long time. And as you can see from my smile, I am going to give you some approach towards handling this current market. The market is crashing, but I'm smiling, and some of my old time investors are also smiling. But I'm sure people who have just come into the market, especially post COVID, people who have started investing, they might be having a difficult time right now. So I just wanted to give you guys my best tips, or a very simple framework to understand how to operate in such market situations. Okay, if you're a long-term investor, you will definitely benefit from this live stream. So please pay attention. If you're a short-term trader, probably this is not the right live stream for you. um, okay, we have just one person right now on live stream. Can you just quickly tell me if you're able to hear me? If I get a yes, we'll move ahead. Okay, I'm going to assume that everything is running okay. So, recently, what has happened? We have experienced a mini bubble in the mid, small, and SME markets. Last couple of months, the bubble came crashing because last year, 2024, people got some phenomenal returns from their stocks, especially the small cap and the mid cap segment, and including SME segment as well. Okay, and just like a classic bubble, a bubble is where the market is overvalued, overheated. There were signs as well. There were IPOs left, right, and center, and everybody was making a lot of money. People got euphoric and overconfident in the market, and it happens. Market never stays in a fair value. It's either overvalued or undervalued. So it went into an overvalued zone, and as soon as the FI started pulling their money out, thanks to various reasons. First was, of course, there was a lot of overvaluation around, but that didn't happen in a large cap, which I'll speak about maybe in a couple of days. But the main money that was there in mid cap and small cap, it came out quickly. Now this hurts the retail investors the most, because these are the stocks which they get attracted to, and they also have higher volatility. Unfortunately, newcomers should understand that small and mid cap require very little money to get in and get out, to fall price, so that their price can be moved very quickly, and it does move very quickly depending on how they are performing, or with what kind of investors are getting into it. Okay, so that happened, and people experienced their first crash, and Indian economy also took a breather in the sense that it slowed down a little bit, and that is directly impacting on the stock market. All right, stock market reacts before the economy. That there's a whole dog and leash effect which I speak about in my courses, but we'll talk about it some other time. Okay, all in all, what has happened is right now the market is down, it's volatile, and it's not very attractive, and a lot of people have left the table. Okay, but I'm here to tell you, it's a good reminder, it's a healthy correction. This is very, very normal for stock market. This might not be normal for you because you are new to the market, but anybody who's been there in the markets for a long time knows that 15 to 20% correction is quite healthy. Okay, and it's very normal, and it usually gives opportunity for the people who have missed out the train to come back. It gives opportunity to people to find stocks at a more sensible rate. Okay, and it is also a very good reminder to understand that just buying stocks on the basis of price and popularity may not be a good long term strategy. It is a very good strategy if in short term you're able to make money, but for long term you need to have stocks which, one, either they don't fall so much in the in bad times, or when the market changes or the weather changes, or you're okay to hold even if they fall. As Warren Buffett has rightly said, that even if market shuts down for 10 years, you should be able to hold those stocks. Those are the stocks that you should buy. Okay, so no matter what happens to the price, if you're able to hold on to stock, that is a good sign of choosing a good company where you have faith and confidence. Or they should not be moving so much with the market fluctuations. Okay, these are two things that you can look for as a long-term investor. All right, so now what is my method? Okay, I'm going to give you three simple steps or processes which I use to make myself very comfortable with negative market. If bear market is there, I'm usually not the one to be worried about. I'm usually happy. I have a smile on my face because most of the money is made in market crashes, believe it or not. And I will soon tell you about Sir John Templeton's story as well, which is the inspirational story that got me into stock markets and got me into buying during bear markets. Okay, personally, I've seen many such short-term corrections in the market. They usually go away. Media makes a big hue and cry of it. This happened during COVID, of course. Now, please understand things are not as bad as COVID. Okay, that is the first thing you should always keep in mind. Our economy is not stopped, it's just taken a little slow down to it, not stopped like what happened in COVID. And if we can survive COVID, this particular situation we can definitely overcome. Things are not as bad as things were during COVID time, so always remember that you have a reference point for that. Okay, so what's my method? First of all, this is how I train my mind to be okay and be comfortable with buying stocks during market falls. Okay, I'm always looking out for individual stocks which are falling down due to maybe bad quarterly results or short term negative news. And then I buy those particular stocks whenever there's an opportunity where I see the news is overreaction and the long term fundamentals are okay, so I will buy them. This is one of my typical strategies of buying a stock. Okay, a recent example, two recent good examples were stocks like IRCTC fell because of some news of government changing the profit sharing percentage. Then there was a cable company also recently which I had bought, which fell down because of a news which could not be verified at some point of time. And then there was Uflex, whose quarterly results were reflected badly, but it was not actually such a bad situation. Okay, so I'm not recommending these stocks for you to buy. I'm just giving you examples. So when a single stocks falls down maybe 5, 10, 15%, thanks to a bad quarter or some short term bad news, I usually end up buying it and sell it at a fair price. That is what I my usual strategy is. So when we keep doing this over a period of time on individual stocks, when the entire market falls, buying a lot of stocks in bulk is very comfortable. Suddenly doing that becomes very difficult. You cannot change your brain suddenly, but over a period of time, the best training is try to pick out good quality stocks when they've fallen down, individual stocks, even if the market is up. Okay. The second thing is keep doing your due diligence. Okay. On a regular basis, I won't say daily, but couple of times a week at least, I will go and search for good stocks and keep doing my study. Instead of looking at different pieces of news and checking my portfolio, I check annual reports, I check quarterly results, investor results, I check screener, not the chart, not the price, but I check fundamentals of companies and I check new past news where I'm able to pinpoint good companies based on my framework, which at some point you'll get to know on my YouTube channel. Okay, so I keep pinpointing and making a watch list of stocks that I like, and maybe the price is I'm not comfortable with the price. Okay, sometimes you do get really undervalued opportunities, but that is a different story. But sometimes you feel that the valuation is not good. That is again a very personal perspective. At this point of time, whenever I see stocks in my checklist fall down thanks to some short term bad news, buying them becomes almost easy because then I know what is the long term potential of the stock. Okay, so if you have a list of stocks that you already want to purchase but you're not comfortable with the price, this is how you can start studying. And again, to study the stocks you do not need a single rupee. Okay, so right now, even if you're not interested in market, maybe you're not you don't have enough courage to buy stocks, I would recommend start reading annual reports of the stocks that you thought you wanted to buy when they were popular, and right now they might have fallen down. So maybe start looking into fundamentals of those companies and you'll see value in them. Maybe you can buy those. Okay, so these are the two things which help me train my mind continuously. And when the opportunity comes, and again, a crash is an opportunity for people to get in. Okay, it becomes very comfortable if you have these two things. You have your practice of buying stocks when they're falling, and when you have studied the stocks and you have very clear idea of what stocks are like in fundamental on fundamentals, buying them during market crash becomes super easy. In fact, you're happy because you're getting it at a better price. All right, so I will call it a day. This live stream was supposed to be 3 to 5 minutes, but I've given you already given you good practical advice. I'll end it on this simple note that I heard from Manish Chokhani, who's a big investor, recently heard in one of his interviews that in bull markets, people rent stocks. Okay, and in bear markets, stocks go back to their rightful owners. Okay, this has got a big meaning behind it. If I get a few comments, I try to explain it next time. But if you've already understood what I'm saying, I hope that makes sense to you. As usual, happy trading and happy investing, and I'll see you guys in one of my next videos. Bye bye.